Every session is the same. Trap traders, hit the stops, move the market. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Great start to the week. We've had some big moves already in a few of the pairs. Lots of movement. Today we're going to be talking about every session is the same. We talk about the 12 candle window. We talk about structure, big picture, the timings, risk reward, setting your stop, setting your profit target. But today we're going to focus a bit more on just looking at how simple you need to make your trading. And every session is the same. We talk about the three things that markets do. They break out, they pull back, and they trend. They break out, they pull back, false break reversal, stop hunt, reverse. They break out, they pull back, and they go into a trading range. So hit the stops, pull back, and go into a trading range. Now we saw an example of each one of those yesterday amongst the 6 pairs. We're going to go through those because each one of those pairs gave an example of every one of those scenarios. Those are the only 3 things that markets do. We need to look at the big picture. We talked about the 3-hour window for each session. So we've talked about our timings. New York Eastern Standard Time, 8 to 11 p.m., 2 to 5 a.m. So that's Asia. London, New York, 2 to 5 a.m., 8 to 11 a.m. We talk about that first hour is often the stop hunt or the trap. Now we saw an example yesterday of a market that consolidated and squeezed prior to the New York Open, and we saw some explosive trend trades on 3 of the pairs. But we're also going to go and look at how that market set up and how the stop hunt trapped traders down low, and the pushes were 3 pushes into the low through that consolidation and squeeze for the breakout continuation, whereas the other pairs were consolidated inside of the range, and immediately in that first hour of our 12 candle window went 1, 2, 3 and hit the stops, went sideways into consolidation, and then reversed for 50 pip moves. What's really important is to step back and think about what's happening. We talk about a high and a low being put in place. Now that can be from the previous session going into the close of New York. That can be from Asia. That can be from London. Every time a session ends and we're heading in towards that next 12 candle window, mark off your highs and your lows, because we know that above and below both of those are where the stops are. They hit this, they put a high and low in place, and then they consolidate volume inside. And then our next question is what's the big picture structure? Do we have an ascending triangle? Do we have a descending triangle? As they trap volume, is there a bigger geometrical picture? Are we in a larger 2-day structure? Are we in a rectangle, a head and shoulders pattern, a 3 pushes? We redraw our highs and our lows every session because that's where the money is. So you should be able to identify, and in some cases we may have Asia here and we may have London here, but we still have session highs and session lows. If the stops have already been hit, we redraw those levels because we know, again, where is the money? When you head into that next 12 candle window, 1, 2, 3, 4, in that first hour, okay, if we have stops, number 1, we're going to get one of 3 things happen. We're going to get a stop hunt to one side or the other. Okay, we're going to get a squeeze for a breakout, so nothing happens. It consolidates in that first hour. Or we're going to get a breakout of that range. So we either get a 1, 2, 3 at some point in that first hour or 5 candles, or we get a breakout of a range or we get nothing. It goes sideways. Now that breakout can be to the bottom, to the top, because remember, what do we have here? We have money, we have stops, we have orders. Orders, breakout orders, take profit orders, limit orders, whatever they may be. But once they've pulled it back in and consolidated, again, this could be Asia, this can be London, this can be New York. Every session's the same. They have a 12 candle window. They either break out, pull back, and trend. And again, that comes back to looking at what happened in the consolidation. Are we in a stop hunt high, stop hunt low, hitting the stops, hitting the stops, hitting the stops, squeeze and breakout? Or are we in a consolidation where they go bang, bang, bang to hit the stops and pull back inside or consolidate at the high of the day or the low of the day? Or do we have a hit the stops, hit the stops, hit the stops, and just range trading back and forth between the high and the low? Structure. High of the day, low of the day. Where are we at in relation to yesterday's high and low? Have any of these pairs, any instrument that you're trading, they're all the same. Has any of them broken out or hit a previous day's high or low? Paul Tudor Jones made a statement one time. He said, if the market's trying to go in a direction and it's telling us that's where it wants to go, don't try and fight the market. So if the market breaks through a range and pulls back, hits it again, pulls back and consolidates, you're possibly in a consolidation for a continuation. That is different than hitting stops and pulling back inside of the range. Hitting the stops, pulling back and trending back in the range. Very important to identify what's happening with the previous day's high and low. So the next thing is timings. Now, again, we can emphasize, a lot of people have asked, can you trade the stop hunt? Can you take the trades outside of that window? Absolutely, because there are different scenarios that will develop, and obviously there are variations. We can have an extended range stop hunt where in that 12 candle window they move down, like we saw this on Friday. They may move down 100 pips and then go another 25, extending the range in that 4th hour and hitting a previous day's high or low, especially if it's a higher low of the week. Consolidate and reversal in 3 candles, 45 minutes. And again, I want to emphasize this. In most cases, the fastest a market will reverse is 30 minutes, which we talked about yesterday. It's important to set alerts because you might be fixated on a trade that you're already in, or you might be fixated on a setup or a particular pair for whatever reason, but another pair may give you an alert where they just had an extended range movement and a reversal setting up for maybe 50, 75, or 100 pips move in the other direction, where they have locked in the low of the day and they're reversing to go back after the money, or they're reversing to come inside in that extra 3-hour window, just as the New York window is opening, giving us an understanding that we may now be in a possible, false break reversal for a trend trade in the next session. Very important. But every session is the same. They may not, there's all different variations, but you have a high and a low, and in that next 12 candle window, whether it's Asia, that 1st hour typically, okay, and that 1st hour will most often be, right, the trap, the stop hunt, or both. Okay, it can be both. So we saw where we can get a stop hunt and traders will chase that move thinking that it's running away without them. They take it into an extreme, so they might go up to the high of the day. They hit stops. Okay, they clear the money off the board. They go into consolidation, but now traders are trading the breakout. They're also trading the trend, what they think is the trend. They're chasing the stop hunt and the trap. The market goes into consolidation, engulfs, goes sideways for a few candles and shifts down and goes back to where the move started to get the money on the other side of where traders have chased that trade and put their stops below. And that's really important to understand. Stop hunt, trap, trade. Now sometimes that trade may be a trading range of 50 50 pips back to the other side, and then it may pull back and go into consolidation, but you're selling high. If you're buying this, you want to be buying low. So you can be in the stop hunt prior to this 12 candle window opening. You may take a trade in that extra 3-hour window somewhere. But when they go to the high or to the low, you need to be either at break even, taking money off the table, or being prepared to have that trade come back against you. Very important. In the majority of cases, these trades will be at round numbers. So you should be able to identify, whether it's, if you're at you could be at 50, 25, double zeros. So when the market starts going crazy and the spreads are flashing and they're pulsing price, and then they're holding it and consolidating it, and you're looking for the candle entry and you're staring at price, look at the number levels, because if you see that there's been a shift candle and they're going sideways still for an hour, that's where we talk about fighting for price, fighting for a better fill. You may have a trade where the high of the day is here. They shift below it, okay? They shift below this with an engulfment. The numbers are here, and they go sideways back and forth. You may have a 5 or 6 pip better fill in there somewhere where it eliminates the spread. You're still selling high or buying low depending on the setup. But if you chase the price of the close of the candle, you might be looking at 6 to 10 pips difference sometimes, depending on how large that candle is. So you need to be prepared before you go to the screen. If they go and stop hunt the high or stop hunt the low, I'm looking for the stop hunt to occur at this level. I'm expecting that. I'm looking to get in at or near this price. Or if they've squeezed in and it's going to be a trend trade, identify where the most recent stop hunt candle is, the counter trend candle, to position your stop. So if you're going long, look for the bear candle. If you're going short, look for the bull candle, because that trader who's long on that candle or short on that candle is trapped. And once the market shifts, especially in a squeeze or an explosive trend breakout, that trader, the market will not go back, because that allows a trader who's in a losing position to get out of the market. And the whole idea is to trap the volume and then move the market. Risk reward. So another simple concept, risk reward, right? Okay. If there's a low down here and there's a high up here that we're heading towards for a stop hunt, okay? We know there's money here, we know there's money here, and in that first hour, okay, in the 1, 2, 3, 4, they go up to hit stops. What is the distance from high to low? High minus low. You want at least 30 or 40 pips minimum, because, I'll say plus 35, because if you think about it, you got numbers here. Again, that could be 0, this could be 25. We'll call that 50. 50. From high to low, if that's 30, 35 pips and the stops are here, we know that that market to go from here to here is going to have to go about 40 pips. Now, if your fill, though, is down here somewhere, okay, and you're filled at, say, 25 pips, okay, we want to look for markets where they've, over the course of the session or the day, they've widened that out so that our high and our low are going to be around at least 40 pips, okay? Because that means it's going to be probably a 50 pip move for them to hit the stops. So you need to start thinking in those sort of terms. Now, there are exceptions to this situation, because as we get over 3 sessions, we can get 3 levels of rise, where the most recent one might be 25 pips, right? 25, but we've got 3 levels of stops over Asia, London, and New York, and it could be the other way, where this will be 75 pips to the bottom, but it's a 100 pip stop hunt to the next level down. That's a different situation, but I'm talking about generally from high to low. When we start the session, every session is the same. Every instrument's the same. People ask me, can you do this on gold? Can you do this on oil? Can you do this on the Canadian dollar? They're all the same, but you need to be aware, where is your high and your low? Okay, if like one of the reasons I trade the British pound crosses is this. Typically, there's always a 50 pip move. On the majors, those ranges may only be 25 pips, so you're risking 15 to 20 pips maybe for 25 pips, whereas these pairs, okay, and you can't trade every session. Somebody asked a great question, how long am I at the screen? How many sessions do I trade? Typically, I will come to the screen around 1 o'clock. I usually look at my levels in the morning every single day. Monday, Friday, I will look at Asia. Definitely look at Asia. If my alert goes off from a previous day's high or low, I will look at Asia. Generally speaking, I'll come to the screen around 1 o'clock my time, which is 1 a.m. New York. I look at the charts, I mark my levels, because there are certain setups. If the market moves 50 pips in Asia, there are certain setups that will often come into a possible trade setup at the end of the Asian session. But generally speaking, I look at a 3-hour window, the 12 candles, but I come to the screen an hour or so beforehand to be prepared. I look at that session. If I have a good trade in that session, or if I see something setting up that takes the 3 hours to set up, I will pay attention throughout that next 3-hour window as we head into New York, because I know that every session, at some point, people are looking for these trades in between. But what happens ultimately is they pull it back inside. They pull it back inside. At some point, they consolidate volume. I talked about this before. They give you all these little great setups. But at some point, they either come out, they'll break out in a trend trade, or they're jamming them in. It all depends on the setup and the structure, the day, or they're going to go to the top for a breakout pullback and a move back down. But every session has consolidated volume. The market is about this. Trap people inside. Hit the stops, widen the swings. So we go from the high of the day, then the low of the day, into the next day. They consolidate it and they build up more volume over the course of the day. Every session ends up being the same. Stop hunt. Okay, we can have a trap, we can have a stop hunt, we can have a trap in that stop hunt, and then a trade. Every session is the same. So real quick review, structure, big picture. We saw a couple of great ascending triangles yesterday that developed with smaller rectangles inside. Boom, big move out. We saw some rectangles develop over the course of Asia and London on the pound Aussie, pound New Zealand. Step back, let the market work its magic for you. It tells you what it's going to do. It sets the high and low for you. That's where they're putting stops. They're consolidating volume. If you don't see a simple setup that evolves into that first 12 candle window, then think this is setting up for the US session, or it's setting up for the Asian session the next day. Very simple. High and low of the day, high and low of yesterday. Very important. Just think, where is the money? Again, where is the money? That's what they're going after. That's the name of the game. Trap traders, shift the market, hit the stops. Timings. Focus your energy on mastering a 12 candle window. You can chase the pips, you can do all those other things, but if you start identifying and going back, printing off your charts, okay, you'll start to realize that once they lock in a high or a low in these simple setups, and engulfment, traders have asked me, what's the entry candle? Print off your charts, mark off the highs and lows in that 12 candle window, and there's your entries. There's a shift candle. They hit the stops, they engulf it. They do one of three things. They break out. Study what trends are. Consolidate the volume, hit the stops, break out, continue the move. When it's a measured move, a mirror image of that setup, they do not come back. There is no pullback until the move is over. They will move at 100 pips before they pull back. Very important, because you do not want to counter trend a mirror image breakout trade. Risk reward. Make sure that you understand the distance. If they hit the stops to the next level of stops, or where there's pending profitable trade sitting, that you have at least 50 pips from stop to stop possibly. It doesn't mean it has to be 50 from high to low, but start thinking. If they drag the market out, look at the most recent level in Asia or London or US, whatever it is, where there's a profitable trade, and start thinking to yourself, okay, that's 60 pips now. Well, the next quarter level is 3 levels of drop or rise from that target. They're probably going to consolidate if it matches the timings to give you a possible trade setup. So start setting alerts. We talked about this yesterday. Find the highs, find the lows, set alerts. Price action. What do you need to enter the trade? If it's a stop hunt reversal, I want to see an engulfment candle. There should be a shift candle where it engulfs a previous bar's high or low and completely closes beside it. Now you will see some variations of that. You'll see some that close together and the next candle confirms that for the move, or it's a breakout trade at the timings after the stop hunt's been complete. We saw that with the 3 peaks sell high pattern scenario. Often you might see a reversal candle that doesn't completely engulf it, but the next candle takes off and it's a breakout setup. Very important, especially in that hourly rotation. Pin hammers on an extended move, 1, 2, 3 at the end of a range. When it hits a previous day's high or low, you'll get an engulfment that can be a pin hammer. You'll get a pin hammer sometimes beside an engulfment candle. But again, print off your charts, mark off the highs and lows, and look what sort of setups reverse those markets in these 12 candle windows. And then focus on your live execution. If you can't see it in your practice, how are you going to see it in live time? And keep thinking. Timing is so important. I cannot emphasize this enough. The clock. Okay, timing. As you get to the end of each hour, okay, if they've done a stop hunt, start thinking the next hour. Okay, I need to see an engulfment or a pin hammer after a 1, 2, 3, whatever that is. But start thinking hourly rotation. It's going to be at the end of the hour or the beginning of the hour. Especially when they hit the stops, they trap traders, there's going to be a trade and they're going to shift the market. So hopefully you got value out of today's video, traders. We're going to look at each pair from yesterday, step by step, marking highs and lows, looking at the timings, looking what a keyed trader's off to seeing that setup in live time, and then focusing on that 12 candle window and understanding that in that pre-market hour, stop hunt, trap. One of the two, maybe both. Keep it simple. Narrow things down to really mastering 1 or 2 setups, trend trades, sell high, buy low setups. Have a great trading session, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion on every session is the same. If we look at yesterday, yesterday's a great example. We talk about, number one, looking at the bigger picture structure. Our first thing we want to look at. Is there any other sort of geometrical patterns? As you can see, we're looking at the pound Swiss. We have previous day's high with the blue line, previous session's low. We go into the next day, and then Asia immediately takes out a high that develops in the rollover session and trades higher. So all we're doing is marking off highs and lows. We're coming to the screen later in the day in this changeover window. We're just marking off highs and lows, looking at structure, and looking at how this market sets up going into the Europe-London window. We mark off our highs and lows, and again we have our overall high and a breakout pullback as we head into the Europe window. We're waiting for a stop hunt before we do anything. We see the market comes down 1, 2, 3. Before reversing and going 1, 2 sideways, 3 to the high hitting stops. The market reverses back 1, 2, 3, consolidates at hitting the stops at the low and pulling back and giving us an engulfment in that 13th candle. So the market pulls back and gives an engulfment. Some traders may have taken this as a long back to the, wanting to trade that back to the high. Some traders may have been trading that short off the high. And again, we see that the market has trapped volume inside, as it did in between Asia and Europe. We go into the U.S. session 12 candle window, and we have a second engulfment long. And again, now traders, you have to look at a chart like this and say, well, there's an existing trade off the high, an existing trade off the low. The market has had one push down, two pushes down, three pushes down, and an engulfment with a hammer as we head into the U.S. 12 candle window. Now that first hour goes 1, 2, 3 to the high, inside bar. But we also have another structure with the smaller rectangle where the market has broken out. And now we also have a rising trend line, which gives us an ascending triangle. So again, traders who are looking to short this market, now we have two long trades supporting this. So the first long trade has now been able to go to break even. The person who was short off the top obviously has been stopped out. Traders who are looking for that reversal have a breakout candle. So this is an example of a 1, 2, 3 inside bar and a measured move. Now again, this is why it's important to look at structure, the timings, look at where profitable trades are already in place, and clearly also understanding the difference between a stop hunt that reverses and a stop hunt that consolidates for a continuation. We have two long trades. This market, the trader who's long has had no resistance whatsoever to this trade. And then the market, of course, for traders who are willing to trade the break, are positioned in if they weren't already in this trade. And again, an example of a breakout in Asia, a pullback, consolidation for filling more orders, hitting stops in London, pulling back, engulfing, continuing that move after one push, two push, three pushes down, and a continuation for a measured move. Now again, traders who possibly, just again looking at the measured move, one full distance of this ascending triangle, that measured move was completed in that U.S. session movement. So an example of a trend trade. Now again, looking at the pound New Zealand, just at a different example. Again, we apply our same approach. Each day we draw our most recent highs and lows. And again, there's nothing to argue about here. It's not hindsight. We're looking at highs and lows. We're looking at timings. We're looking at round numbers. As the sessions unfold, we redraw our lines. So we have stops hit in Asia. The market auctions down, goes through the lows before pulling back, and then extending that move further, taking the market lower. In that next 3-hour window, we have a pullback high, so we redraw our highs and lows. The market pulls back in that first 12 candle window hour, pull back for the trap, and then 1, 2, 3 down for the stop hunt. Stop hunt high, 1, 2. Breakout pullback. So again, traders, look for, you're going to see this pattern over and over again. This is the first candle of London. Breakout pullback. Traders entered in maybe long on the break of the pin bar hammer. After the 1, 2, 3 and the breakout pullback, that market went up 50 pips and took out the swing high from the Asian session, consolidated at numbers. So again, our 12 candle window, we have a trap, a stop hunt high, stop hunt low, and then a trade. We go into the next rollover session. We draw our lines, our highs and lows, because again, we know where there are existing stop loss orders from profitable trades. Looking at our big picture structure, we're in a sideways rectangle. No real clear geometry. We're inside of Friday's range. We go into our U.S. session first hour. We have our highs and lows marked. And again, we see the market trade up towards the high, takes out the last bull candle high, where traders may have shorted this after the 1 push, 2 pushes, 3 pushes into the high before the short move, 25 pip stop hunt down roughly, inside bar consolidation, and a 1, 2, 3 to the high, sideways, and an engulfment candle. Again, stop hunt, trapping traders chasing the move back to the high. So stop hunt and trade all in one move. Consolidation, engulfment, back through the swing low stops in that changeover, and then down to get the London trader who was profitable going long. Hit the stops, shift the market, hit the stops, go back into consolidation. So again, just marking off our highs and lows, paying attention to the timings, looking for the stop hunt, the trap. You might get 2 stop hunts. A big shift candle like this is not a trade. That's a stop hunt. 1, 2 to the high, 1, 2 to the low, breakout pullback, pin hammer, stop hunt high, back to the Asian session shorts. At the numbers, pulls back into consolidation, and in that next 12-hour window, we get a stop hunt and a trap. 1, 2, 3, hits the highs, goes sideways, shift candle, and the stop hunt back down to the lows. We're looking at the British pound. So again, we have the previous day's high, which is marked by the blue line. Again, you can do these yourself. All we're doing is marking off highs and lows as the day evolves. We have a breakout in the rollover just prior to the Asian session. So we're coming in this changeover window between Asia and London. So we mark off our highs because we know the market has given us new highs and pulled back into consolidation. And we know that there are stops on both sides of these levels. Market, as we head into that Europe Open, hits the stops on the traders who are caught lower down, shorting the market. Trapping traders chasing a move back up. 1, 2. Again, there's your big candle and little candle. 1, 2. 1, 2, 3 down. Breakout pullback for a shift candle. Some traders may have traded the London Open back towards the highs. Again, if you're in a trade like this and a market breaks a high or a low, you need to be going to break even, taking money off the table, or being prepared for that market to come back against you. So we just keep marking off where traders' stops are. And again, people say, well, where's the trade? Well, again, we sell high and we buy low. You're in the middle of the trading range. Now, if you do take this and you're trading this as a trend trade, be aware that, again, as soon as a market breaks a high or a low, that this market can reverse. The market goes 1, 2, 3 to the high, pulls back right away to stop hunt traders who were long before pulling back into consolidation towards the high and shifting down. 1 push, 1, 2, 3, pull back, 1, 2, 3 down. And not quite an engulfment, but we get a pin hammer on the next candle. Breakout candle and a 1, 2 down. Sideways, pin hammer, and a breakout candle. So this is an example of a market where the market has a 1 push, 2 pushes, 3 pushes down into the bottom of the day, into the peak formations. 1 push, 2 push, 3 pushes down sideways, and shift candle. After the 3 push and the stop hunt in the last stop hunt is in the first hour, and then we get a shift candle at the US Open, breaks the high, and again, we can mark off our high and our low for a measured move. So breakout, pullback, continuation. Again, the market told us in the early part of the picture, breakout, pullback, stop hunt down low. The market did not break to the high to hit the stops. It hit the stops, consolidated, and then started working the low of the day. 1 push, 2 push, 3 pushes, 12 candle window US Open, shift candle, trend trade, back through the highs. So print these charts off, traders. Go through your own charts, mark them off. It doesn't matter what instrument you're trading. And again, big picture structure. Okay? We had a trend line. The market broke that. Okay, but it pulled back. 1 push, 2 push, 3 pushes. It pulled back inside. So we redraw our line. We still have an ascending triangle with a trend trade. Okay? Again, geometry. And again, if we measure the big picture from top to bottom from Friday, okay, we get one full expansion of that rising ascending triangle. Stay disciplined, traders. Stay focused. Keep it simple. Every session is the same. Stop hunt, trap, trade.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.